Welcome back to Wealth Mavericks, the podcast where we help doctors understand the secrets to unlocking generational wealth. And on today's episode, we're talking about, I think, a pretty interesting topic, and that's understanding your fair share. Most of the people I talk to feel like they're overpaying in federal income tax, yet we've got all these people saying that the wealthy don't pay their fair share. So today we're going to talk about what's your fair share and what do you do about it if you feel like you're paying too much. Income is taxable, cash flow is plannable, and you have cash flow that you are choosing to take as income, candidly, because your CPA doesn't know what to do with it. There are ways that you can reduce that. We have what we call the cash flow recovery conversation, and we will tell you how much you're overpaying based on the lifestyle that you live and the income that you earn.
You only need so much to fund your lifestyle, pay all your bills, live the life you want to live, and then you use all this excess income that's left to build your wealth, invest in other assets. But if you're taking it as income, you're paying the highest tax rate on those last dollars you're taking, and you're using what's left over.
We hear this term all the time, and I've got some interesting stats that I'll share right now. And then Bob's got some interesting stats from the, I don't know, Bob, the IRS. It comes directly from the horse's mouth in this case. But if you didn't know this, so the top earners, we were just looking at the numbers, top earners in the US to qualify to top 1% earners earns like 819,000 or something like that. Top 5% is 330 something thousand, and top 10% is just above 150,000. So most of the people that we work with are certainly top income earners, and those people, the top 1%, pay over 40% of the tax revenue in this country. And so all I know is in the conversations I have, most of the people I talk to feel like they're overpaying in federal income tax, yet we've got all these people saying the wealthy don't pay their fair share. So let's have a conversation. I think this is a very real conversation for people. And sometimes, I'll just say, like, people who have come from nothing and have made something of themselves and they are successful, they've kind of walked on both sides of that aisle. They've probably at one point in their life, what I've talked with people about the difference between being poor and being broke. Being poor is a state of mind, being broke is a state of account. And so sometimes people have broken free from a poor mindset into a wealthy mindset or an affluent or positive outset, from their mindset. But sometimes when you have a poor mindset, you're looking at the world through a lens that's maybe not accurate. And when I hear things like, oh, the wealthy should pay their fair share, it's like, they are. Like, what are you talking about? So when we look at the world, what does fair share even mean?
Yeah. I think that's a good question. And I think it's a fair question, literally. Fair share is a vague term that really is based on the individual. And when we hear this fair share term all the time, most of the time we hear it is when we're hearing politics or, people in media saying this group of people aren't taking care of their fair share, paying their fair share. And so I think from a poor mind perspective, that's exactly what you were talking about is a misinformation or lack of information, knowledge of what the taxes actually just look like.
Is fair share, is there like a defined term in like the IRS tax code that says you have to pay your fair share? Like, is that a thing?
No, fair share is not an IRS term, it's a social term. And so the IRS expects you to pay income taxes based on your tax return, based on how your assets perform, whatever that is, that create the income. So your taxable income. They don't say your fair share of taxable income. They say your taxable income. And we're required to report our income based on how we get paid. So W-2, that is a tax form that shows that I'm earning wages and salaries. 1099, that's a tax form that says I got paid some sort of interest or compensation. 1099E, 1099I, 1099 dash, whatever that letter is, indicates how I received that income. Okay. So we take those dollars and we report those onto our tax return. Which schedule? It depends on the 1099. Okay. So if I have a business and a partnership or a real estate or an S corporation, and I've made money, profit, which is income, flows down to the tax return on its right schedule. So usually it's the Schedule E. Then it is formulated all on the first page of the tax return, right? So, I mean, it could be really complicated. I can start getting really into the weeds, and I can do that pretty quickly, but I don't want to do that. I just want to say that the IRS, to answer that term, fair, no, it's taxable income. We get to report that. Now, if the IRS feels like we're reporting wrong information or misinformation, as we hear in the media, they're going to fact check it through an examination, is their terminology. We call it a audit. And what they're going to do is they're going to send you a letter in the mail, and the letter is going to say, we want to see this information for this year. And you got to give it to them. So, I mean, that's, at the end of the day, it's fact checking. I guess the best way to put it this way is, because we use the term fair, it really is based on, how do we justify our income? Some people don't do any planning. They just go and have assets, whatever the assets create, investments create. They take those tax forms, put it on their tax return, total taxable income, and pay their tax. All right, that's cool. And then there's some who go above and beyond that and say, well, actually, I'm going to put some planning in place. I'm going to put some money into a retirement account because I need to save. So I need to have a nest egg for the future. Well, the government gives you tax benefits for that. So that's going to lower your taxable income. So now your total taxable income is going to be lower because you did that. Oh, well, I'm going to probably put some money here. So it's depending on the planning of what the IRS, the government, gives us, dictates that taxable income. The more you have income and assets, the more of the tax code you have available to you. The less income and assets, less of the tax code you have available to you. So what is fair? That's the big question, is you got to define that to the IRS. This total taxable income for me and my family, me and my wife, this is what we deem fair. If the IRS has a question, they'll ask it. If they don't, they won't.
Right.
Sounds pretty normal in a conversation. Does that make sense?
Yeah. I'm waiting for Aaron to jump in with some questions.
It makes sense, Bob. I think for me, I would like to hear a more, you said it's kind of a nebulous question, but I think our listeners would like to know, well, how do I know what my fair share is? Yeah. And we have conversations day after day with doctors where we're actually able to define for them, what is your fair share? Because you get to a point where you only need so much to fund your lifestyle, pay all your bills, live the life you want to live. And then you use all this excess income that's left to build your wealth, invest in other assets. But if you're taking it as income, you're paying the highest tax rate on those last dollars you're taking, and you're using what's left over to fund all of that, when what we help do is keep it as the full dollar, so that's really not part of your fair share, right? So can we talk a little bit more about that and how we help people do that?
Sure. So I think when we start looking at this, is that understanding how the income tax code defines what we should be paying in our taxable income. It's a progressive tax system, and we have a episode on this in our other YouTube channel called Asset Coach and Tax Strategist, going through what we call the income funnel and what the progressive tax system is. And your certain amount of income, your first dollars get taxed at 10%, then your next dollars get taxed at 12%, and so on and so forth, to the top dollars is taxed at 37%. So that 10% to 37% is a progressive tax system. The more you make taxable income, the more taxes you pay. All right, well, so those that have more income, wealthier, are paying more in taxes. Now, if I'm a business owner, I own my own practice. Okay. And in our practice, we've been in business for 6-7 years. We've have a sales rep comes in for our equipment and says, we've just upgraded our equipment. You have 7-year-old equipment. Here's what the new equipment does. You should probably replace it. Here's what we're going to give you as a deal, blah, blah, blah. And all of a sudden the doctor spends $100,000 on equipment. That's an expense line to the business. But what it also does is the government gives that doctor the ability to depreciate that equipment, because for the fact of I had equipment for 7 years, it's not as good as the new equipment. So the government allows you to have physical property to depreciate lower, and it's an expense line on the accounting and the financial statements, which means it's lowering my profit. So I'm saving money on taxes. So I have less profit to go to my tax return as taxable income. So that is a way. Now, is that the business owner's fault in not paying their fair share? No, they are paying their fair share because they just invested in new equipment to care for their patients better, to allow their employees to be better employees, maybe have to hire a new employee who's more technically advanced for that type of equipment. They're paying more income to that person. Both the business, the practice, and that individual is paying higher taxes on that income. And so they did pay their fair share, just not from their own pocket, but from the equipment. That sales rep got a commission. He's got earned income. He's paying taxes. The manufacturer of that equipment has to pay taxes on what they have done, right? There's a sales tax that the doctor probably had. Now he hired a new employee who's getting paid. That flow of cash in the system is what generates tax revenue for all government. Makes sense. So how do you define fair share now? You can't.
Well, and it sounds to me like we don't need to. Like this concept of fair share, and the more you're talking about it, the more I'm feeling like this is a made up term to cause people who are not earning as much money. Yeah, it's a division. It's all it is. It's like I'm gonna make him or her the bad guy because they're making more money and they're not paying their fair share. I've actually seen a bunch of man on the street videos where they're interviewing people asking the question, do you believe the wealthy pay their fair share? And like almost universally, everyone says, no, I don't think they are. And then when you bring the stats to them and say, here's what they're paying, the top 1% is paying 40% of the taxes. Does that feel fair? And people are like, oh, whoa, no, like that's not fair at all.
Yeah.
And so I think it's almost like, you know what? Screw this term of fair share. It's not even accurate. Like people don't even know what it means. It's just a tool of division. And I think for some people, some doctors who are very successful in what they've done in their life, and they've crawled through the trenches and they've dealt with all the stuff that they've had to deal with, and it takes a lot to get to where they are. You should not feel bad about that. No one should ever make you feel less than because you're not paying your fair share. They can't define it. You can't define it. And the point is like, you should pay taxes on the income needed to live the life that you want to live. That to me is just from a moral and ethical standpoint, that's perhaps fair.
Well, this is the argument of flat tax. Everybody should be paying the same percentage. Okay, right? Then what's fair? The same percentage everybody's paying.
Right.
Right? Will that ever happen? Probably not, unless we become communists and then we're not paying any tax. It's all theirs.
Right.
Right. I mean, at the end of the day, in our system, I'm going to share my screen here, Joe and Aaron. I want to show you. So the Daily Signal, this is a website that was done March 3rd, 2021, just a couple of years ago. Elizabeth Warren was very popular in discussing and talking about the wealthy not paying their taxes, their fair share, to the point of this conversation. And I want to highlight this little chart here. Do the rich pay their fair share? And this is based on 2018, but we can push this forward to every year, right? When you go to the far right, This is to your point, Joe, of the top 1%. At the time, it was 540,000. With inflation from 2018 to 23, now it's 819,000.
Wow.
That's inflation right there. Okay. So 504 So 540,000 was the top 1%. Share of all income earned, 21%. Paid, 40%.
Mm-hmm.
So they earn 21% of what the total is, but they pay 40% of the taxes.
Right. Well, I
Right?
remember when this conversation was going on, and Elizabeth Warren specifically called out Elon Musk, and he basically threw down the gauntlet.
Yeah.
Is like, let's go.
Mhm.
Because he had just paid a giant tax bill based on, I think it was capital gains from the sale of some of his assets.
Yeah. And capital gains would be 20%. So calculate that. If he made $1 million at 20%, that's $200,000 tax.
Right.
If he made $1 million, do you think that sale of that asset was a profit of $1 million? Maybe more.
For him, yeah. I mean, we're talking,
Right.
I think it was 12 billion. So,
Okay.
I mean,
So
big numbers.
I don't think
But the
my
bottom
calculator
line,
has enough zeros.
Mhm.
yeah. Yeah, that's a turn your calculator sideways kind of conversation. I
Mhm.
think the bottom line that I want doctors to feel, as they're listening to this episode is, one, you have worked hard to get to where you're at, and you shouldn't allow anything to feel like degrading you for that in any way, shape, or form. So this rhetoric that's used by people to cause division, you should ignore this. Like, this is not helpful. It's not helpful to anybody, by the way. And so your responsibility really is to understand, what is the lifestyle that I want to choose to live? And we've had this conversation, you guys, on this podcast before. Do not try to keep up with Dr. Jones, right? This is a fallacy. Like, you do not need to you need to live the life that you want to live. And that's a lot of the work that we do. So yeah, we do work in taxes and we help people save that. But a lot of the work that we do is coaching and mindset and helping people just be set free. We call it the 510s lifestyle. I don't know if we've done a podcast about it, but we should have a conversation about that as well. Live your life on purpose. Be intentional with what you're doing. And you are likely severely overpaying in taxes. And it's because you're paying on every dollar that you earn. And Bob, I love your saying, income is taxable, cash flow is plannable. And you have cash flow that you are choosing to take as income, candidly, because your CPA doesn't know what to do with it. There are ways that you can reduce that. And so I would encourage anyone who's listening, we are very generous with our time. We have what we call the cash flow recovery conversation, and we will tell you how much you're overpaying based on the lifestyle that you live and the income that you earn. And so I'd encourage you to reach out to Erin, set up some time with her. She's got a calendar link, probably be in the comments. But get control of this. It doesn't have to stay out of control. It might feel out of control right now. You might feel like you're overpaying. You probably are. Let's get it under control. So I'm looking forward to our next episode. Thanks for joining us today. If you have questions, we encourage you, drop those questions in the comments, reach out to us, let us know the questions that you've got, whether it comes to taxes or building your business. We are here to support, and give you content that you need. So until next time, go be a wealth maverick.